Good afternoon, everyone, and welcome to Stock Market Today for Friday, July 25th. It's Alissa Coram here, and more green on the screens to finish the week just ahead of a big week for earnings season. And joining me now to discuss the action that unfolded this week and what to do for the week ahead. I'm saying week a lot, Justin. Join me now, Justin Nielsen, our market research director. What do you
Yeah.
make of this week?
Yeah. Well, it's definitely not weak. It's not a weak
Right.
week. So we've just been seeing continued strength, a little bit less, because again, the way we started this rally was so strong, but now it's kind of settled into a groove, and we'll talk more about that as well as a few stocks. We'll get into one of the stocks that we mentioned on IBD Live this week, focused by Arnie Gutierrez. That's Argan, and then Shopify, which you've been talking quite a bit about. I do have a small position in that. And then finally, JP Morgan, which was also our options column for the day.
All right, sounds like a plan. Yes, I'm in Shopify as well. We got to disclose that. Now that that's out of the way, let's take a look at the major indexes, and we will kick things off with a look at the NASDAQ composite. So on the day, the NASDAQ up about 0.25%, the S&P 500 up 0.4% on the day. So more record highs here. The Dow up 0.5%, and the Russell 2000 up 0.3% on the day. Justin, like you said, we're sort of in a groove here, a very steady Eddie uptrend for the NASDAQ and the S&P at this juncture.
Yeah, and remember the way that this rally started was with some nice. Oh, I mean, of course, first of all, you had the lows where it was, a 12% day, on April
Very
9th.
volatile.
Yes, very volatile. And then, we had a number of 2% days, a lot of 1% days, and even on May 12th, I mean, that was a 4% day, that gap up above the 200-day moving average line. A big day there. But now we've kind of settled into a lot of sub 1% days. They're still up, but it's just a lot less. And that kind of makes it so that we don't get too extended from our moving average lines. And we'll talk a little bit about the regression channel lines at the end of the show, but it does make for a nice picture here. And look, we've been talking about how well we've been trending above the 21-day moving average line. I mean, we're approaching roughly 60 days, certainly on the long end of keeping your low above the 21-day moving average line. But at this point, 21-day moving average line seems like old news. It's the 10-day that's holding this market right now. But again, we haven't been getting too extended. I think that's the important part. You're seeing on the weekly chart a lot of up weeks, but again, it's just not getting too stretched here. So I like the way that we've gotten into highs. I like the way that we've passed that 20,000 level and made some pretty quick work of the 21,000 level as well. And it's just a pretty steady eddy.
Exactly. So, Justin, with this type of market environment, like you said, a long period now that we've been trending above the rising shorter term moving averages, what do these kind of conditions mean for active investors in terms of how they should be handling their portfolios?
Well, I like what Dan Fitzpatrick was saying on our show this morning, the IBD Live show. He was talking about this is kind of like a time where you can kind of hold on to more of your positions instead of trying to constantly be changing lanes. That's what we're doing on Swing Trader as well. Part of the reason for that is if we lose a position now, it might be a little bit harder to find ourselves a
Something
swing
to
trade to go
replace.
forward with, especially because we are knee deep in earnings season. So there's some setups that I've been saying, oh, wow, this is looking pretty good. But then it's like, oh, earnings are in 6 days. Do I want to jump ahead of that freight train? So right now, I think, if you got into this rally early, it's really kind of letting your early work do the heavy lifting for you.
So also what it seems like you're saying is if you lock in profits here, you're reducing your overall portfolio exposure when this is the environment where you want to have some pretty nice exposure because conditions are so great.
Yes, and again, usually that's okay. There's a lot of times the new setups coming up, but whenever you're this early in earnings season, it just can be a little bit tougher to find those setups because you have the earnings and the earnings of competitors and
Right.
everything else that's kind of ahead of you.
Mhm.
So it can sometimes make that a little bit more challenging.
Yeah. And I'd imagine as earnings season continues, there might be some of those opportunities to to do some of that shifting around. Maybe, all right, we'll lock in some profits here now that we do see earnings are behind us and we start getting some of those fresh setups. So,
Absolutely. And with some of these stocks that are having these huge gains, just take a look at, for instance, GEV, GE Vernova from this week, a huge 14% gain on Wednesday. I do have a position in this. So, this is something that's getting stretched. But if you're not in this, maybe if this digests some gains, if it goes sideways, some of these stocks that have been gapping up in a big way, that can be fuel for another move and possibly a way to get in or add to a position, if you will.
all right, let's quickly take a look at the other major indexes and let's focus on the weekly charts for these. You pointed out the weekly action for the NASDAQ, which was up about 1% for the week. The S&P was stronger this week, up 1.5%.
Yeah, so tech was a little bit lackluster at times, taking some harder hits. Still, nothing wrong there, but the S&P 500 had a little bit of a stronger week, and I like this look that it had. Really tight action that it just broke out of. So a good look there. The Nasdaq was maybe a little bit earlier in that regard. July 3rd was kind of where a lot of the indexes started taking a little bit of a break. That's where we were starting to get into a little bit of extended territory. But we really consolidated, digested those gains in a very constructive way. And now it seems like we're off to the races again.
Okay, and let's take a look at the Dow real quick. Up
Yeah, the Dow
1.3% this week.
has, yeah, so it's been a strong week for the Dow, but it was coming in a little bit more the last couple weeks instead of holding as tight. But still, I mean, you go to the daily chart, this is still holding above its 21-day moving average line. It just doesn't have as much of an extension above its 200-day moving average line. We did, get that golden cross recently. That's where the 50-day crosses above the 200-day. And, look, we did break out of kind of this little short shelf here, and we're holding above it. And that's what we want to see.
Yes. And let's talk about small caps. Here's IWM tried to break out this week, maybe pulled in a little. Overall, seeing some tight action, I would say, with the Russell 2000 ETF IWM up 0.9% on the week. Mid caps up 1.4%. So maybe a little bit of a better look here for mid caps on the week. What are you seeing in terms of that breadth and that participation? We can also take a look at RSP, but your thoughts on breadth?
Yeah, so we definitely on Wednesday saw a nice move for the breadth. RSP was looking very strong, as well as the small caps participating. I'll be honest, I did try the Russell 2000. I've tried this so many times, and every time Lucy pulls that football away from me. So I did exit my position that I tried the very next day. But look, it's not broken. It is setting up, and a lot of folks are saying, well, isn't it time, isn't it due? But at the end of the day, I'm not going to go by what I'm not going to try and tell the market what it should do. I'm just going to say, okay, this is what it's doing, and I have to react accordingly.
Mhm.
RSP in the same vein had a really strong day on Wednesday, but unlike, well, actually, it had a strong day on both Tuesday and Wednesday. What I liked about the action on Tuesday was it was very similar to what we saw just a few weeks ago, where it popped its head. The difference here is that we had that follow up on Wednesday, as opposed to an immediate kind of correction and digestion of the gain. So a really strong look for RSP. And again, that says a lot about the breadth. It's
Mhm.
the RSP, of course, is the equal weighted S&P 500. So it's not just those trillion-dollar companies that are making this go up. It's a lot of
Right.
participation across the board, and we've seen that with a lot of the advancers over decliners, really coming in strong on a daily basis. But at the end of the day, sometimes it's very few stocks that are making the huge gains, and a
Yeah.
lot of that is having to do with earnings.
Yeah, and impressive to see RSP outpacing the S&P this week with a gain of 1.9%. So we'll have to see
Yeah.
how those mega cap earnings shape up next week. So that's another thing to include in this Friday episode super briefly. I will point folks for a more in-depth look at earnings coming up in the week ahead to our earnings cheat sheet show with Alexis Garcia and Ed Carson. They do a great job with that. But the cliffs notes of the cliffs notes here, Justin, is that we have Meta. Microsoft and Amazon next week. Those are some of the big ones, but it's going to be a really huge week for earnings. So,
Yeah,
talk to
and
us
look,
just really quickly about the mindset, the approach to portfolio management with that.
yeah, a lot of times what this comes down to is how much cushion do you have going into it. If you don't have much cushion, it's a little hard to manage your risk because it's a very binary event, and if you don't have any cushion, you could very easily be looking at some outsized losses on a position. So we try and avoid that. It's no fun if you have a cushion and you lose it all. But it is a little bit of a different mindset when you are playing with house money as opposed to a new position where you don't have that house money to play with. So we saw earnings this week with Google, Alphabet,
Mhm.
the parent company there, Tesla, and again, this is continuing. We've probably got in the next 2 weeks about almost 300 of the S&P 500 stocks that will be reporting earnings. So that's what we've got in store for us in the next 2 weeks. So as you mentioned, if you really want kind of that in-depth
Mhm.
analysis, that's where Alexis Garcia and Ed Carson do such a great job on the earnings cheat sheet, and that's on every Friday
Yeah.
morning.
Yeah. And I would say something that we love to reiterate is not only do you want to be aware of when these big reports are, but how do they influence the stocks that you own, right? I mean, we know AI is such a huge theme. Could Meta or Microsoft or Amazon say something that, for better or worse, has an impact or a ripple effect on that broader AI theme, which touches so many different industry groups? So, even if you're not in some of these mega caps, they could still have a potential impact on your portfolio. Or if you're investing in index ETFs like you and I like to do, you could be
Right.
owning these indirectly already. So, something to keep in
Absolutely,
mind.
and especially if you're using a leveraged ETF, I
Yeah,
I have TQQQ. Not only are you getting exposure to it, you're getting a lot of exposure to some of those.
right.
Another thing that and certainly as you mentioned, a lot of these big players. Look, when you are a $1 trillion plus company, where you're spending your money matters for a lot of these smaller players. And one more thing we should add here, one of the ways that you can kind of get a gauge on the movement that is expected is you can use the options market. This is something that we've talked a lot about in terms of using the at the money call premium, adding that to the at the money put premium, and that gives you a sense of what the expectation is for the move. If you just choose the expiration that's right after earnings, the closest
Hmm.
expiration to after the earnings call, so that gives you an idea of how much movement to expect, and then you can kind of plan accordingly. Is
Right.
that too much risk? Because while it does tell you the expected movement or range of movement, it doesn't tell you
Hmm.
direction. So you have to
Hmm.
assume that it could go down that
Either
much
way.
and you have to prepare accordingly.
Yeah. And I know we'll be talking about some of these next week on IBD Live as we prepare for their reports. So looking forward to that. All right. Let's go to Bitcoin. I do own some IBIT. I know you've been in here as well, Justin. So we saw some tight action, and on the day today, Friday, down a little less than 2%, but it did recover off lows and find support at the 21 day. What do you make of what we're seeing in crypto?
This was a tough one because on my swing trader hat, as it was undercutting this area of support, it was really tough to say, well, how does this deserve to be held when it's undercutting that level of support? When you get tight action, you kind of say, okay, it's going to break one way or the other, either to the upside or the downside. In this case, it was to the downside, but it was right there at the 21-day moving average line where I could you know, obviously say, oh, this would be a place to add. And
Right.
the way that it closed, I think, was positive. So what we did
Mhm.
on Swing Trader was we took some off, and now, depending on how things go, we could add that position back
Yeah.
next week as it continues to strengthen. As you mentioned, I do have a position in this as well. But look, I liked where it got support at the 21-day moving average line. So even though it did undercut that level of support, it found support exactly where you would want to see it come in next.
Exactly. Okay, before we take a look at some individual stocks, let's go over some ETFs, our sector action for the week. Any highlights in particular, Justin? We can sort of breeze through these communication services. Meta is a big one in here. I believe Google is the other big component as well.
Exactly.
So, your thoughts on how this sector is shaping up?
I mean, there was a downside reversal on Thursday. So that weakness that you got today, a little bit expected. But again, it's hard to complain when you're holding above the 10-day and the 21-day moving average line.
And here's a look at energy. It's still in a downtrend from a relative strength standpoint, and from the price action, still beneath that 200-day. So I don't think the energy stocks that we've been talking about are not your oil and gas stocks. They're your
Right.
utility names. So I guess we could skip on over to XLU.
Yes, and XLU has been looking great. I mean, go to the weekly chart real quick, if you don't mind, because this has been showing a lot of strength compared to what utilities usually do in an uptrend. Usually they don't participate as much. It's usually the money flows out of those into growth. These have enough growth in them that they are participating pretty nicely.
Okay. And let's go to healthcare real quick. Looks like got a little bit of a bounce for healthcare this week from a relative strength standpoint.
Yeah, doing better, but still a ways to go to catch up.
Yeah. Okay. And here's XLF, the financials. We have a lot of the big bank earnings behind us now, but we've seen other areas in the financial sector that have been looking interesting lately, Justin.
Yeah, and this XLF is doing, really well considering that Berkshire Hathaway, BRKB, is a sizable position there, a sizable weight. So even though this has been dragging it down, there's enough strength elsewhere to really kind of, boost XLF in quite a nice way. And then also one of the ETFs that we've been looking at that kind of focuses on some of the big ones like JP Morgan, Morgan Stanley, Goldman Sachs, and so on is KBWB. That's been looking strong as well, very similar to XLF.
Yeah, nice upside reversal at the 21-day line in the previous week. Okay, just a couple more here. XLY, you have your Tesla and your Amazon in this. So, no surprise to see a little bit of a hit on Thursday with that Tesla earnings reaction. So, XLY down 1.6% on Thursday, but recovering somewhat today. And we've got Amazon earnings coming up next week, as I mentioned.
Mhm.
Now, here's a look at XLI continuing to show its leadership here. You have your GE, your Boeing, your Uber in this area, Justin, but we're continuing to see strength in industrials.
Yeah, and I mean, look, there's a lot of these industrials and kind of like the machinery and the electric contract, all of these different things that are, again, supporting the moves in AI, again, the infrastructure part. And so it's interesting that this is as strong as it is, but certainly very good looking.
All right. And we'll cap things off with a look at materials, which led on the day on Friday, up about 1.2%.
Yeah, and you can thank NEM earnings for that one. So NEM Newmont is had a very strong day. Was really kind of driving that XLB up. Gold was a little bit lackluster, but GDX had a very different look, and I think. Again, GDX is the gold miners as opposed to the spot price of gold for GLD. And so Newmont definitely having an effect there. But you've got a lot of these that have been looking
Mhm.
pretty decent, and set up. Probably also worth looking at silver SLV, even though that came in a little bit, it's still above its 21-day moving average line. And then I also want to give a little bit of credit to FFTY, which is the innovator IBD 50, because of all of these sectors. The IBD 50 was really strong, and that's been trending very nicely lately. Although I will say, FFTY, one of the half the gains basically today came from FIX. FIX, huge move on earnings there, up over 22%. So that was again half the gains on FFTY were due to this one stock.
Yeah. And it was, I think, hard to get positioned in a name like this ahead of the earnings report. And you would think building AC, well, that AI adjacent type play. At
Mhm.
least that's how the market is treating it. You can tell right away with how it responded to the DeepSeek day in January. So, what do you do with it now here? Well, after a gap up, see if it can hold the gap up low, form a new base structure. And it doesn't have to be a full on base, even. A number of us were trading Credo, which had a gap up on earnings, let it settle down a little bit, maybe even get an undercut to shake some people out. And then when it starts to reverse, you can get in. So maybe even that type of setup could potentially be on the horizon for something like Fix. We'll just have to see.
Yeah, there's always when you want to get into a stock, there's always ways to do it, right? We do try and make it so that we can manage our risk, and that's
Yep.
one of the benefits of waiting for some digestion because it gives
Mhm.
you a higher stop to use. It's if you buy on the gap right at the open, okay, where do you put your stop? But once you have some trading, okay, now you've got a place to put your stop, and that just allows you to manage your risk, and that's what gives us a little bit more comfort to go into a position when we can manage that.
All right. Let's now take a look at those three stocks that we wanted to highlight, Justin. AGX. This is Argan. Speaking of that building sector, this definitely in there, up 5.1% on the day, up 14% for the week. A big outside week upside reversal here.
Yeah. And I like how you pointed out that DeepSeek day, January 27th. So that is kind of a day that tells you a little bit about those that are AI adjacent. You might not recognize, oh, building heavy construction. Yeah, I'm diversified away from tech, but as you mentioned, that was kind of became very obvious with that DeepSeek news, who really was exposed to that because of the infrastructure, telecommunications, and everything like that. But this is one that we were talking about earlier this week. It had that nice support at the 50-day moving average line, and that reversal was a little tough, because it didn't quite make up enough ground, but really strong the next day. And then I like where you drew your line because that's a great place to kind of say, okay, here was an area of resistance that it kept on bumping its head up against. And then today, it really broke through in a strong way. This one has a while before earnings. So we've kind of been talking about how there's all these setups, but earnings are around the corner. You kind of had the option here without earnings. It was
Mhm.
a strong day today, 5%, but you've got that 50-day moving average line that you could use if you had gotten in a little bit earlier. Or, a lot of times for swing trades, we'll use the low of the entry day, or you could use the top of that area, the resistance level that it just broke through, and say, okay, well, if it comes back into that, maybe it's not the right time. So again, having a place where you can cut your loss quickly is great. And it doesn't mean that you have to wait until this breaks above the traditional buy point at 246.60.
Yes.
You've got this kind of early entry, and then you can add as it breaks through the traditional buy point. And so that's a good way to kind of increase your exposure to things that are working.
Mhm. All right, moving on to shop. Sounds like we both own it, Justin. Up 1.9% on the day, finding support at the 10-day moving average.
Yeah, but I'm willing to bet that your entry is better than mine. This is one I've been trading around a little bit, get knocked out, get back in. And also, I think it's worth mentioning that this was, I believe, our New America for this week. I think a great thing to look at there are these New America articles
Mhm.
because it really gives you a sense of what is going on with the company. What is the story behind it? Because as much as we love to look at charts, there's a company behind these stocks, right? And if you can kind of understand what's going on with the company, it can give you some extra conviction. So I highly recommend reading those New America stocks. With some great analysis, and it's not a fluff piece, right? This isn't written by the PR department of the company. We're really kind of looking at, okay, what does the competition look like? What are the obstacles for them growing? What does their growth trajectory look like? So there's a lot to dissect there. This one does have earnings coming up in a couple weeks, so just be aware of that. And a strong move here. It came in a little bit, but again, holding the 21-day moving average
Mhm.
line for quite a while here. It keeps on getting support at that level. So this was just one more example of that support. Another touch, well, not quite a touch, but came down to that, and it's
Mhm.
looking pretty strong.
Yes, uptrend here still intact. And let's go to JP Morgan. So, speaking of financial sector names and bank stocks, here's a look at one of the big ones.
Yeah, so you could look at this and say, okay, well, it had this little consolidation after some strong weeks there, really ramping up, and then not much happened on earnings with these. It was kind of a muted move for a lot of these banks that came out, but it's kind of consolidated in a very short pattern here. Probably not something that I would normally look at as an entry for a position. Sometimes you can get away with those shorter patterns with a swing trade, but another way to do this, another option, if you will, came from Gavin McMaster, who does our options material. So he wrote an article today that was about using a long call. And why that can be important is because, okay, look, if you're going to buy 100 shares in this stock, you're looking at about a $30,000 position, a little bit less. But if you wanted to go with the option, you could actually get similar exposure
Hmm.
for just $5,000 or actually less than that. So if you're kind of at a point where you don't want to give up too much ground on some of the positions that you have, maybe you're running out of buying power, this can be a way to get a position. Now, look, this is also something I have to be very frank with you. If you're dealing with a smaller account,
Mhm.
um, be very careful because while it can be great to say, oh, yes, I'm getting exposure, almost the same kind of exposure as having 100 shares. If you're dealing with an account that's, let's say, $30,000, you almost have a $30,000 position in this one stock by buying the option. So you have to be aware of that because leverage does cut both ways. Options use leverage,
Yep.
and if it works in your favor, that's great. But if it doesn't, you could quickly lose it all in a very short period of time. And so
Yeah.
the option that Gavin chose in this case was actually a pretty far out there option. He chose June of 2026. So that gives you a full year. And the option that he chose was a 270 strike. That has about a 75 delta right now. And so it's like owning 75 shares of the company. Think of it that way in terms of your exposure. For every point that it moves up, you're basically getting a 75-cent move in your option. So you're getting a lot of participation for a lot less money. And look, if you're a little uncomfortable with that, some other things you could do is you could use a sold call to make it a bull call spread.
Mm.
So there's a lot of things to do that. And that's one of the great things about our options content.
Yeah.
We give you options with it. So,
Exactly. And paper trading, right? If you're
yeah.
new to options, try out the paper trades and see how that works for you. And here's that article right there if you want all the details on this JPM long call option strategy. Thanks so much for highlighting that, Justin. Let's go over to you and some additional charts on this Friday to give us deeper perspective on where we're at in the market trend. We're going to bring him back because we have an additional chart to show.
Oh,
And
did I leave?
ready when you are.
Okay. Let's see. Here is my Thinkorswim. So for folks that have been watching Webby, you're familiar with his regression channel lines. I basically just duplicated what he does in TradingView on my Thinkorswim. So as a reminder, what we're looking at here is starting the regression channel line back on April 22nd, which was the follow through day. And I think Webby, as he's been going through, he keeps on moving it to the day because that's what we do, right? We keep on moving it along, but then we want to freeze it at a certain point, and we usually choose 50 days as our point to freeze it. So 50 days, trading days, I should say, from April 22nd is July 2nd, and so that's where this is frozen. Now you can see that, okay, the white line is your regression channel line. Your solid lines are one standard deviation above, that's the red line, and then your green line is one standard deviation below. And I think this got messed up. I think it didn't do the 75. So I'll need to change that. But imagine this line down here a little bit lower. It went to the default of half a standard deviation. But it gives you kind of this idea of how the the index has been trading, and this is the S&P 500. So as much as it might seem like we're extended, here's the regression line. We're actually still below our regression line. Again, this has to do with how strong it was at the beginning. Now things have settled down a bit. So this, to me, doesn't look like we're super extended. We're not that extended from our moving average lines, again, because things have gotten a little bit tighter lately. So it's a good look here. Now on the composite, which I think this one does have that 75.
Yeah, there we go.
Yeah, negative 75. That's what it should look like. We're seeing the same thing. It did come out really strong right out of the gate, kind of came up to this one standard deviation above, came back down, tested over at the regression channel line, and now we got support here at that 0.75 below the regression channel line, standard deviations below the regression channel line, and that's where we got support. We've just been kind of hanging out here between the regression channel line and that 0.75 below. So things are not looking extended by my observation here, and that can kind of give me a little bit more of a comfort zone, knowing that, okay, I might be extended in some stocks, individual stocks. Make no mistake, this is the indexes we're talking about. So that tells me it's okay for me to keep my exposure up. But remember, you still have to use the individual stocks for sell signals, because I don't care how great the indexes look. If some of my individual stocks aren't looking great, I need to protect myself, either protect my profits or protect myself from losing capital.
All right. So as we wrap, give us your battle plan for the week ahead, Justin.
Well, first of all, watch the earnings cheat sheet show with Alexis and Ed, get a handle on what earnings are coming up. And over the weekend, look, it's a good idea to always have your watch lists fresh. Keep those fresh, so you're looking and aware of setups that might be coming. And then also make sure that you've got an understanding of where you're going to be stopping yourself out. Now, for a lot of these positions, you might have started with your stop, let's say 5% below your entry price. Well, if you've got a 20% gain at this point, move that stop up. Where is a reasonable place that this stock, if it does come in incorrect, where it should get support? Or for a lot of times, if it's not a stock that you have particular conviction in, you might be taking some of those gains at 20 to 25%. And look, you can even move it into some of the stocks that are maybe a little bit stronger. So there's a lot of different ways to play that portfolio management side of the game, but it really does come down to making those decisions ahead of time, because if you try and make them in the heat of the battle, sometimes your emotions can creep in, and that's where the trouble starts. So to that end, one of the things that we have as an option for folks this weekend is that we have our level 2 seminar webinar that we're going to be doing. Last time we updated this was, I think, 10 years ago, 15 years ago. So we're going to give it a refresh. Scott St. Clair, myself, Joe Fahmy, we're going to go through all of the elements of the IBD methodology, so people have in one nice spot kind of the whole rules-based system to hopefully help them with their portfolios now and in the future.
Yeah. It's a great foundation for any active trader. So highly recommend checking that out over the weekend. If you can't make it live, you can also watch the on-demand version. So that is an option for you as well. So we look forward to that, Justin. Thank you so much.
And even if you do make it live, you still have access to
Either
that
way.
recording. So it's not like, oh, let me take all these notes and make sure I remember everything. You're going to have access to that recording for quite a while.
Super exciting. All right. We'll see you then, Justin. Thanks so much.
Thank you.
And thanks everyone for tuning in. That is it from us for this week. And next week, IBD Live is going to be your go-to place for all the latest real-time stock analysis at the opening bell and for the first hour and a half of trade as these big earnings reports continue to filter in. We'll tell you how we are managing our portfolios, stocks on our radar, and so much more. So join us and tune in at investors.com/IB Live. We'll see you there. Hope you have a great weekend, and we'll see you back here next week.